So Sam, it was great just chatting about when somebody feels that they're in a chaotic state, like Wall Street in New York City, moving to somewhere like the beach, like Bondi Beach in Australia, which seem like two completely different places, could shape their entire business. What was that experience from you? Because I think a lot of people are in what they would call the rat race, and they want to get out of that, and they want to move to a place that might be more quiet, but still really inspires them and gets the juices going for business.
Yeah, it's a good starting point. And thanks for having me, Daniel. So I spent almost a decade in New York working in global finance, and that was everything you'd expect: a fast-paced, demanding, filled with really talented people. And it was also really formative. I met my wife there; she's Australian too. And while we both loved New York, I think we had this sort of quiet understanding that Australia would be home one day, and we weren't like really sure exactly when, but we did know that when it came time to raising a family, we wanted to do it in proximity to nature, to community, a place where life could be a little like slower and more grounded. So I moved back from New York in 2014, a bit over 10 years ago. And, before we had kids, and my three kids are all been born in Australia. And I think looking back and sort of the point that you raised there is that the decision to move sort of set the foundation for our, not just for our family life, but then for 5M Capital, being away from this like constant market chatter, the daily noise of Wall Street, the financial media, and the 24-hour news cycle, and you know it, being here created the space to think a bit differently. In Bondi, as I'm saying, we're not commuting through Midtown, jammed into a subway like sardines, and with CNBC on the sort of interactive skyscraper there. I'm walking the coastline. I'm spending time with my family and community, and thinking deeply. And then, this becomes a key differentiation about long-term capital allocation. I think that distance, both like physically and mentally, it helps keep focused on what really matters. And for us in our investment strategy, backing enduring businesses, managing risk really carefully, compounding wealth thoughtfully through decades. And we've tried to build 5M Capital to reflect that philosophy.
Recently, we had a doctor on that was talking about how stress was like the number one factor of causing aging for people, like their biological marker and their biological age. I imagine Wall Street has to be one of the most stressful jobs or places. At least, that's what I see on TV. That's what I hear. But what did you learn when you were in that type of environment that you brought into business that has helped with success?
I think stress, particularly at the wrong point in your life, when you're not in a way to be able to cope with it, can be really problematic, and cause real issues for people. I think stress at the right time in your life can be really beneficial, and for me, it was. I think it sort of allowed me to push myself. Also, a decade spent there is almost more than a couple of decades of experience elsewhere, and so I wouldn't change that for anything. I think also, I was probably working, double shifts equivalent for most other jobs. So, it brings you up the curve drastically. You're in the flow of really important dynamics, working with great people. So, learned a lot from competencies, learned a lot from that the like building my own sense of perspective on intrinsic valuations and managing dynamics. But I think as I started to approach, family life, I knew that I needed to change a little bit. There's a lot that I learned from my time in New York. Happy to go into different aspects. One thing that did, I think, really impact our philosophy was that in my sort of first decade, I've had a couple of decades of investment experience, but the first decade I was investing in unlisted businesses. So owning the whole of a business, and these were typically monopolistic things like airports or telco towers. And so, you had to bring a real rigor to the approach, because you're holding these assets for a long time, and you couldn't just sort of unwind an incorrect decision. You had to think, carefully about the cash flows, the durabilities, the long term profile. And so, that was very formative in parts of the philosophy that we've got at 5M Capital, where we invest in monopolistic businesses in the listed space, so that the public equity markets, but we're bringing that sort of unlisted mindset, where we're identifying great businesses, and happy to sort of go through the network effects of scale, the economies of scale, the IP, the things that we look for. But the point is that we take a very deep research analytical. We don't own 100 companies. We just own 25. We study them inside out. And if we wouldn't feel comfortable owning the whole business for like 10 plus years, we don't want to own a single share of it. That strategy has helped deliver some great returns, results for our clients, results for us. 30% annualized in my prior CIO role before setting up 5M Capital, and then 19% annualized since setting up 5M Capital. And I think a lot is attributable to that mindset of like the discipline, only investing in a business when we really understand it, the long runway for compounded growth, and that mindset of bringing that sort of unlisted to the listed space. It gives us conviction when volatility hits, when there's Trump tariffs and trade wars and headlines, where we're able to know really clearly like what we own, why we own it, and that clarity helps us avoid some knee-jerk reactions that plague most public market investors.
I imagine knee-jerk reaction is, the definition of 2025 so far. When you think about what makes a successful company, so if you're looking at a company and you say, these are the factors that make it successful, or this is a company that has potential, what are you looking for?
So we're really focused on long-term, durable, high-quality businesses, and to have conviction over the long term, you need to have a very strong, sustainable competitive advantage, and a lot of that then falls under what we would loosely refer to as monopolies. It's sort of funny. Monopolies often get a bad rep, but in the right reputation, but in the right category with the right dynamics, they can be incredibly beneficial for their customers, their employees, their shareholders, sort of the whole trifecta, as long as sort of the North Star is aligned correctly, and it can create great outcomes for everyone over an extended period of time. What we look for is businesses that dominate their categories, not through brute force, but through unique competitive moats. Things like strong network effects, where that they've got the supply and the demand meeting, and they're able to sort of hold court in the center of that. Scale economies, whereby that their sheer infrastructure, that their logistics chains, that their entire systems provide such benefit that they can then offer things more cheaply, and more accessibly than their other competitors, and it creates like a self-fulfilling dynamic where it's still good for the customers. IP, regulatory positioning, something of irreplaceable value, where it's very then difficult to dislodge these great businesses, and they can earn a very high return on capital for a very long period of time. Such that the competition, it is almost irrelevant because of these great structural advantages.
When you look at these founders or C-suites, because I know it's different than maybe other types like VC investing or things like that, but I know from them, they always say they're really investing in the founders, which, might be totally different. But when you look at either the founders or C-suite, because these might be much larger companies, what do you think, or what do you see in terms of traits that these people possess that maybe other companies that haven't reached publicly traded, or reached anywhere near the revenue markers that these companies are reaching?
Oh, look, it's a really good question. So we're definitely on, not the VC side. We're on the latter side, where the businesses have great unit economics and profitable. VC companies, almost by their definition, aren't investing in profitable um, businesses. We like cash flows. We like seeing the strength of that business being unleashed. But many of them within our portfolio do have very strong founders, or founders that have been very important in setting the North Star, the overall dynamics for the business trajectory. And that's really, really important for us. And I think one of the most defining characteristics there is patience. They're not just looking for like an immediate short-term win. They're looking for like great long-term outcomes, building over decades potentially, potentially more. There's so many great examples on the bigger end of people who are well celebrated, like Jeff Bezos, where that they were reinvesting everything back into the business to make it better for their customers. They had this like customer obsession from day one, and they didn't care about like the short term. They're thinking about how do you build the business to the best it can be over an extended long period of time. We've got other ones in Europe where it's like networks of laboratories where these family founders have been building really disciplined ways, looking to strengthen, not taking undue risk. And when it's got that founder mentality, it's can be really, really different compared to some businesses where there's just a hired CIO who then tries to feel that they need to make their stamp on the business, and they do some destructive M&A or something just to try and feel like they're making a change because it needs to happen in their tenure, their short tenure as CEO. We like founders that have that incredibly long perspective, and that aligns with our thinking.
So I don't know exactly what is the mindset of an investor in terms of what is the return, or how does the return even work? So with what you're doing, you as the investor, what are you hoping to gain? And then what does an investor gain when they invest? And the reason why I ask is, like you're saying, I know that different types of investors, some are looking long term, some only want an exit, some want different, a variety of reasons. But for you, when you're looking to invest, what is important that you understand, you'll return your money, or whatever that looks like for you? How do you gauge this?
We're really focused on compounded, durable, repeatable, risk-adjusted returns. Some stability to it. We want to do this over a long period of time. This isn't a strategy where VC can be a bit like let's pick 10 and or even like way more, but like a lot of them are going to go bankrupt, and then you're hoping that one or two shoot the lights out, and then that's on returns overall for everything. And it's like quite a, like maybe portfolio aggregated. I'm not trying to like slam that environment at all. It's just very different to the way that we think about it, where we expect all of our businesses to contribute. Maybe some of them not as compounded as quickly as others, because some of them might have reached some stability already, whether it's like an airport or an online classified or an essential B2B business software, or a testing and certification business, all these different monopolistic modes. But we're looking for what we would say is teens plus returns. So each year, that the value of your investment with us grows at more than teens, and we can do that through cycles. That's going to create terrific compounded wealth for our clients. It's this balance of what we say is capital preservation and capital generation, and I think that's sort of something for us there. I think when we think out like what do we want to be doing out over 10 years, we want to we're ambitious absolutely as a team, but we're very like risk tolerance really focus where we've got all of our own investable capital in the fund. We've got capital of our respective families, or our teammates have invested their own capital. So, we're very much aligned. It's this alignment isn't a marketing slogan. It's a lived reality, and I think that changes behavior. We treat risk differently. We're not optimizing for just total size of like growing to a behemoth. We're asking ourselves, is this investment good enough for to protect and grow the wealth of the people that we care deeply about? Our families and our clients that are incredibly important to us. So we've got now, and been going for about 3 years. We've got about 100 million under management, and that's been some good trajectory off the back of some really good returns and good top ups by committed clients. And we've got a firm cap at 750 million because it's not that we lack ambition, because there's some very, very large funds out there, and you say, why are you trying to be boutique and small? It's because from our perspective, we believe that performance and scale have a tipping point, that beyond a certain size, the flexibility to how you invest starts to erode, and would rather be the best in class boutique than like a massive sprawling asset manager. We've got very deep personal relationships with a select number of our clients. We care deeply about the team and our culture. We're thinking in generations, not quarters. Sort of back to your point of how you're thinking. It's not just like, do you do an outstanding job this quarter? We're talking about over the long term, where it's like about transparency, accountability, consistency, and our team is tight knit. We challenge each other, we trust each other, we're sort of pulling in the same direction, and I think the culture doesn't like scale that easily, and that's sort of the point. We want to just make sure that we get these great consistent returns for our capital base over an extended period of time, without getting to a point where we're seeing with many others where they almost get too big and they start to then almost implode. We want to stay within that sweet spot.
That could be an amazing lesson, right? I know a lot of people that saw some very fast success, but their business ended up imploding because of that, versus maybe a little bit slower and steady. And I'm just shocked that a lot of these other models even exist. Like you said, they might have to invest in 100 companies and only one hits, knowing that 99 will never go anywhere. It always fascinates me. But besides this lesson of, going at this rate to ensure success and not, growing too big, is there another lesson where you look back, it could even be in your personal life, that you would say every founder, every executive needs to hear this?
Oh, look, I think that's a good question, one that I did some research before starting, but I still wasn't quite prepared for it. And I think that's probably, well, you've got to have patience and tenacity. You sort of knew that, but one of the things that really hit me, particularly going from a large corporates and Wall Street type dynamics, where there was lots of back office and ops and everything to do a lot for you, and when you're going out and building a business, all of a sudden you realize how many hats you have to wear at any point in time. And that's that's sort of difficult. Like, yes, intellectually I sort of knew that starting a firm will be demanding, but I think I really underestimated how fragmented my attention would be. One moment it was like deep in investment analysis, and then the next I'm choosing like what type of accounting systems we need for our group, and then managing compliance, and then onboarding staff, and evaluating like tech solutions, and all of that, whilst trying to like reach out and build a client base from scratch. And that, I think that constant context switching, being pulled in so many different directions, it's more taxing than I expected. But fast forward 3 years, we're in a very different place now. We've got a very strong foundation, systems that work, a lean and high quality team, and a culture that's deeply aligned. So as as someone approaching and building a business, there's always going to be distractions, and there still will be. Now I'm sort of fortunate that we've got the right infrastructure, rhythm, and scale to build the business with focus and integrity. But it was a lot harder. It still continues to be harder than I'd anticipated.
That's an amazing point. We do think, oh, I just want to do sales or marketing, but you don't realize you have to do all of that, and then you have to do customer service, and then you have to send emails, and you have to do many things that you never thought you would have to do, and you have to do all of it until you can obviously hire the team, and I mean that's a whole another complexity there. But Sam, this has been great. If people want to get in touch with you and they want to find out more, how can they?
Our website's a good starting point, 5amcapital.com.au. And, we have lots of materials that we're happy to share with people, some good information on our mailing list. We're happy to connect with people globally. Absolutely. We've got an international client base, part of the name there, 5am Capital, where up early, it's the time to think clearly, but also then, connect with global parts of the world. So please feel free to reach out.
People always tell me, you work a lot because I'm always working at 5 a.m. But they don't realize that I stop working in the day. But I love to work at 5 a.m. So I appreciate that. And I can appreciate the name. By the way, Sam, this has been great having you today. And thanks for joining us on Founder's Story.
Thank you, Daniel. Thanks for having me.